Based on the historical data and forecast, Bitcoin exhibits an overall upward trend, supported by consistently breaking through resistance levels. The RSI readings fluctuate, but generally stay within a range, indicating neither extreme overbought nor oversold conditions. The Bollinger Bands have been widening recently, suggesting increased volatility. Considering this, I propose a swing trading strategy focused on capitalizing on short-term price movements within the established uptrend. My strategy involves entering a long position at $94,600, coinciding with the first day of the forecast period. Given the recent volatility and the potential for price swings, I will set a stop loss at $93,900, right at the support level, to protect against unexpected downturns. The initial target price will be $95,800, aligning with the forecast for January 18, 2026. If the price reaches this target, I will reassess the situation and consider adjusting the stop loss upwards to lock in profits and potentially extend the target price towards $97,200, the highest forecast price. This strategy balances the potential for high returns with risk management, utilizing support and resistance levels and forecast data to guide entry, stop loss, and target price decisions. Based on the historical data and forecast, Ethereum shows an overall upward trend, breaking through the resistance price of $3,350 on January 14, 2026, and continuing to rise. The RSI indicates that the asset is generally not oversold, with values fluctuating between 51 and 68. The Bollinger Bands show that the price has been trending toward the upper band, suggesting bullish momentum. Therefore, I recommend a long position strategy. Entry price will be $3,290, with a stop loss set at $3,230, just below the support price, to limit potential losses. The initial target price is $3,470, aligning with the forecast price for January 22, 2026. To refine the strategy, I will incorporate the RSI and Bollinger Bands. If the RSI falls below 30, consider a buy-in at $3,290 with a stop loss at $3,230 and a target price of $3,470. If the price touches the lower Bollinger Band, it signals a potential buying opportunity at $3,290, with a stop loss at $3,230 and a target price of $3,470. If the price reaches the upper Bollinger Band, consider taking profits at $3,470. This multifaceted approach, combining trend analysis, support and resistance levels, and technical indicators, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, BNB exhibits an overall upward trend, supported by consistently testing the 896 support level and recent price movements above the Bollinger Band center. The RSI values fluctuate but generally remain within a neutral range, with a recent climb suggesting strengthening momentum. Considering these factors, I recommend a long position strategy. Entry price should be $934, coinciding with the initial forecast price and recent upward momentum. A stop loss should be placed at $920, just below the support level of $896, to limit potential losses. The target price should be $957, aligning with the peak of the forecast prices. To enhance the strategy, I propose a layered approach. Initially, enter the long position at $934 with a stop loss at $920 and a first target at $944. If the price reaches $944, consider a partial profit taking, securing some gains. Subsequently, maintain a smaller position with a revised stop loss moved to the entry price of $934 and a final target of $957. This layered strategy balances risk and reward, capitalizing on the predicted upward trend while providing a safety net and opportunity for further gains. Based on the historical data and forecast, XRP exhibits a slightly upward trend, consolidating within a defined range. The support price consistently holds at $2.03, while the resistance fluctuates around $2.11. The RSI values indicate periods of both overbought and oversold conditions, with recent values trending towards the midpoint. The Bollinger Bands suggest periods of volatility and potential breakouts. Considering these factors, I propose a combined strategy leveraging RSI and Bollinger Bands for optimal returns. My strategy involves a long position entry at $2.17, coinciding with a bounce from the support level and a brief period where XRP touched the lower Bollinger Band. A stop-loss order will be placed at $2.04, just below the support level, to mitigate potential losses. The initial target price is set at $2.25, aligning with the upper Bollinger Band and a conservative estimate of upward movement. If the price reaches $2.25, I would consider a partial profit-taking and a trailing stop-loss to capture further gains. This combined approach balances risk and reward, capitalizing on the observed trend and volatility while protecting against adverse price movements. Based on the historical data and forecast, Solana shows a generally upward trend, consolidating between the support of $136 and the resistance of $146. The RSI fluctuates between 55 and 68, indicating neither extreme oversold nor overbought conditions. The Bollinger Bands have been expanding, suggesting increasing volatility. Considering the forecast for the next week with prices ranging from $143 to $149, I recommend a long position. The entry price should be $143, with a stop-loss set at $136 to protect against a potential downside reversal. The initial target price should be $149, aligning with the forecast high. To refine the strategy, I will incorporate the RSI and Bollinger Bands indicators. If the RSI dips below 20, consider a long entry at that price with a stop-loss at $136 and a target price of $149. Conversely, if the price touches the top of the Bollinger Bands, consider a short position at that price with a stop-loss at $146 and a target price of $136. Combining these, a long position at $143 with a stop-loss at $136 and a target price of $149 provides the most efficient portfolio, capitalizing on the predicted upward trend while mitigating risk. Based on the historical data and forecast, TRON shows a generally upward trend. The price has been fluctuating within a support of $0.298 and the resistance of $0.313. The RSI indicates periods of both overbought and oversold conditions, with recent values trending towards the overbought zone. The Bollinger Bands have been widening, suggesting increased volatility. The forecast for the next week predicts a continued upward trajectory, reaching $0.326. Therefore, I recommend a long position strategy. We will enter a long position at $0.311, placing a stop-loss order at $0.304 to limit potential losses. The initial target price will be $0.323, aiming to capitalize on the predicted upward movement. To refine this strategy, we'll incorporate RSI signals. When the RSI falls below 20, oversold, we'll consider a long entry. Conversely, when the RSI exceeds 80, overbought, we'll consider exiting the position. Considering the forecast and recent RSI values, we will enter at $0.311. If the price breaks below the lower Bollinger Band, it signals a potential pullback, triggering a stop-loss at $0.304. If the price reaches $0.323, we will take partial profits and adjust the stop-loss to protect the gains. This combined approach, utilizing both Bollinger Bands and RSI, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Dogecoin has been exhibiting a sideways trend with fluctuations around the $0.14 mark. The RSI values have remained largely between 50 and 65, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been relatively narrow, suggesting low volatility. The forecast anticipates a slight upward movement, potentially reaching $0.151. Considering this, I recommend a moderately bullish strategy. We'll initiate a long position when the RSI dips below 50 and the price touches the bottom of the Bollinger Band, which occurred on January 15, 2026, at a price of $0.14. The entry price will be $0.142. To manage risk, the stop-loss will be set just below the support level at $0.136. The target price will be set at $0.151, aligning with the forecast high. To maximize potential returns, I suggest a tiered target approach. The first target is $0.147, providing a quick profit if the upward momentum is short-lived. If the price continues to rise, the second target is $0.151, capturing the full extent of the forecast. This strategy combines technical indicators with the forecast to capitalize on the anticipated upward trend while incorporating risk management through a well-defined stop-loss. The portfolio will allocate 60% of capital to this strategy, given its moderate risk-reward profile. The remaining 40% can be allocated to other high-potential assets. Based on the historical data and forecast, Cardano shows a mixed trend with periods of both upward and downward movement. The support price consistently held at $0.386 provides a strong floor, while the resistance at $0.423 acts as a ceiling. The RSI fluctuates between 48.6 and 59.4, indicating neither strong overbought nor oversold conditions. The Bollinger Bands suggest periods of volatility, with the price occasionally touching the upper or lower bands. Given the forecast predicting a rise to 0.407, 0.409, 0.412, 0.413, 0.422, 0.416, $0.414, I recommend a long position. My strategy will be a blend of RSI and Bollinger Bands. I suggest entering a long position at $0.393. Set a stop-loss at $0.386, just below the support level, to limit potential losses. The initial target price will be $0.414, aligning with the recent high and the forecast. If the price reaches $0.414, consider moving the stop-loss to break even at $0.393 to protect profits. If the upward trend continues, a secondary target price of $0.423, the resistance level, can be considered. This combined strategy leverages both technical indicators to maximize potential gains while minimizing risk. Based on the historical data and forecast, Wrapped Beacon ETH shows a clear uptrend with consistent price increases, breaking through the resistance level of $3,650. The RSI indicates that the asset is generally within a neutral range, but has approached overbought levels recently. The Bollinger Bands have been widening, suggesting increased volatility and potential for further price movement. Considering these factors, I propose a long position strategy to capitalize on the upward momentum. The entry price will be $3,590, coinciding with the initial forecast price and a recent pullback. The stop-loss will be set at $3,570, just above the support level, to protect against a potential reversal. The target price will be $3,790, aligning with the highest forecast price and allowing for a significant profit margin. To refine this strategy, I'll incorporate RSI signals. If the RSI falls below 20, indicating an oversold condition, we will enter a long position at $3,570, with a stop-loss at $3,540 and a target price of $3,650. Conversely, if the RSI exceeds 80, signaling an overbought state, we will consider exiting the current long position or initiating a short position. Combining these signals with the Bollinger Bands, if the price touches the lower band, it suggests a potential buying opportunity, while touching the upper band might indicate a potential selling opportunity. The final portfolio will prioritize the long position with an entry price of $3,590, a stop-loss of $3,570, and a target price of $3,790, as it aligns with the prevailing uptrend and offers the highest potential return. Based on the historical data and forecast, Bitcoin Cash has been experiencing a downtrend recently, with a significant drop in price from $649 to $590. The RSI consistently dipped below 60, indicating a weakening momentum, and reached a low of 43.9, suggesting a potential oversold condition. The forecast for the next week projects further decline, with prices falling to $581 and $576. Considering these factors, I recommend a contrarian strategy, anticipating a potential bounce after reaching a support level. We'll enter a long position at $581, placing a stop-loss at $576 to limit potential losses if the downtrend continues. Our target price will be $618, aiming for a modest profit as the market shows signs of recovery. To refine this strategy, we'll integrate the Bollinger Bands. The price consistently trading near the lower band suggests increased volatility and a potential rebound. We will add a secondary strategy to buy when the RSI falls below 20 and the price touches the lower Bollinger Band. If the RSI reaches 20 and the price is at $576, we will enter a long position with a stop loss at $570 and a target price of $612. Combining these two strategies, we create a portfolio with the most efficient risk-reward ratio. This portfolio will be weighted 60% towards the first strategy and 40% towards the second strategy, aiming for a balanced approach to capitalize on both potential market movements. Based on the historical data and forecast, PAX Gold shows a clear upward trend. The price has consistently been moving higher, with the recent resistance at $4,620 being tested multiple times. The forecast for the next week predicts continued upward momentum, reaching $4,690. Considering the RSI values, which have been fluctuating between 47.0 and 71.0, we are currently in a slightly overbought territory, but not excessively so. To capitalize on this trend, I recommend a long position. Entry price should be $4,610, with a stop loss placed just below the support level at $4,570, specifically at $4,560. The initial target price should be $4,680, aligning with the forecast price and the upper Bollinger Band. To further refine this strategy, we will incorporate the Bollinger Bands. When the price touches the lower band, around $4,270, it signals a potential buying opportunity. However, given the current upward trend, we'll focus on a more conservative approach. If the price retraces towards the middle of the Bollinger Bands, around $4,470, we can consider adding to our position. The second target price will be $4,690, based on the forecast. This combined strategy leverages both RSI and Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, SKY has shown volatility with a recent downward trend. The support price is consistently at $0.0577, while the resistance fluctuates around $0.0642. The RSI has been oscillating between 41.0 and 56.8, indicating neither strong overbought nor oversold conditions recently, but trending towards oversold. The Bollinger Bands show that the price has been fluctuating within a range, with the bottom band consistently around $0.055 and the top band around $0.068. Considering the forecast data, the price is expected to remain relatively stable in the short term, hovering around $0.06. Therefore, I recommend a moderately bullish strategy with a focus on short-term gains. We will implement a three-pronged strategy. First, a long position at $0.0592 with a stop loss at $0.0577, just below the support level, to protect against a potential breakdown. The initial target price will be $0.0642, the resistance level, aiming for a quick profit. Second, based on the RSI, if the price dips to below 40, enter a long position at $0.0577 with a stop loss at $0.0557 and a target price of $0.0609. Third, if the price touches the upper Bollinger Band, around $0.0657, take profit immediately. This portfolio combines a primary bullish strategy with opportunistic entries based on RSI and Bollinger Bands, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, Tezos shows an upward trend with price fluctuations. The RSI consistently remains above 50, indicating a bullish momentum, although it dipped below 60 towards the end of the observed period. The Bollinger Bands suggest that the price is currently near the upper band, implying a potential for a pullback or consolidation. Considering the forecast prices, which are consistently above the recent closing prices, and the support level at $0.556, I propose a strategy focused on capitalizing on potential upward movements while mitigating risk. The forecast predicts a price of $0.59 on January 16, 2026, and further increase to $0.611 on January 20, 2026. My recommended strategy is to enter a long position at $0.59 on January 16, 2026. Given the recent price action and the RSI, a stop-loss order should be placed at $0.556, just below the established support level. The initial target price will be $0.611, aligning with the forecast for January 20, 2026. If the price reaches $0.611, we can consider moving the stop-loss to break even to protect profits. If the price continues to rise, a secondary target price of $0.63 can be set. This strategy combines the bullish signals from the RSI and forecast with risk management techniques by utilizing support and resistance levels for entry and stop-loss placement. Based on the historical data and forecast, Dash shows a strong upward trend. The price has significantly increased from $37.3 to $81 in just over 2 weeks, indicating substantial momentum. The RSI consistently moved above 50, peaking at 82.5, suggesting strong bullish sentiment. The forecast data further supports this trend, predicting a continuous rise to $95.9. Therefore, I recommend a long position strategy capitalizing on this upward trajectory. I propose a three-pronged strategy combining RSI, Bollinger Bands, and support/resistance levels. First, initiate a long position at $63.1 when the forecast begins. Place a stop-loss order at $56.5, just below the support level, to limit potential losses. Set the initial target price at $77, aligning with the forecast for January 19, 2026. Subsequently, if the price reaches $77, move the stop-loss to the center of the Bollinger Bands, approximately $41.2, to protect profits. Finally, the ultimate target price is $95.9, based on the forecast for January 22, 2026. This strategy balances risk and reward, leveraging the bullish trend while incorporating safety measures. Based on the historical data and forecast, Curve DAO exhibits a generally upward trend, particularly noticeable in the recent forecast period. The RSI consistently fluctuates around 50 to 60, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening, suggesting increasing volatility and potential for price movement. Given the forecast showing a rise to $0.465 and the support price at $0.421, I recommend a long position strategy. We will enter a long position at $0.433. The stop-loss will be placed slightly below the support level at $0.41 to protect against unexpected downturns. The initial target price will be $0.45, aligning with the upper Bollinger Band and a reasonable profit margin. To further refine the strategy, we'll incorporate RSI signals. If the price drops and RSI falls below 30, consider entering a long position at the lowest price. If the price rises and RSI exceeds 70, consider taking profits at the highest price. The second target price will be $0.465, coinciding with the forecast peak. This combined strategy leverages both Bollinger Bands and RSI to optimize entry, exit, and risk management, aiming for high returns while mitigating potential losses. The portfolio will prioritize the forecast and Bollinger Bands strategy as the primary driver, with RSI serving as a secondary confirmation signal. Based on the historical data and forecast, TRON shows a generally upward trend. The price has been fluctuating within the support of $0.298 and the resistance of $0.313. The RSI indicates periods of both overbought and oversold conditions, with recent values trending towards the overbought zone. The Bollinger Bands have been widening, suggesting increased volatility. The forecast for the next week predicts a continued upward trajectory, reaching $0.326. Therefore, I recommend a long position strategy. We will enter a long position at $0.311, placing a stop-loss order at $0.304 to limit potential losses. The initial target price will be $0.323, aiming to capitalize on the predicted upward movement. To refine this strategy, we'll incorporate RSI signals. When the RSI falls below 20, oversold, we'll consider a long entry. Conversely, when the RSI exceeds 80, overbought, we'll consider exiting the position. Considering the forecast and recent RSI values, we will enter at $0.311. If the price breaks below the lower Bollinger Band, it signals a potential pullback, triggering a stop loss at $0.304. If the price reaches $0.323, we will take partial profits and adjust the stop loss to protect the gains. This combined approach, utilizing both Bollinger Bands and RSI, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Trust Wallet shows a generally upward trend, bouncing between the support price of $0.891 and the resistance price of $0.994. The RSI fluctuates, but recently has been trending above 40, suggesting strengthening momentum. The Bollinger Bands indicate periods of volatility, but the price has largely remained within the bands, with the center line showing a gradual upward trend. Considering the forecast for the next week, with prices expected to reach $0.972, I recommend a long position strategy. We will enter a long position at $0.872, placing a stop-loss order at $0.841, just below the lower Bollinger Band, to mitigate potential losses if the trend reverses. Our target price will be $0.965, aligning with the forecast high for the week and just below the upper Bollinger Band, allowing for a healthy profit margin. To refine this strategy, we'll incorporate RSI signals. We will initiate a buy order when the RSI dips below 40, indicating an oversold condition. Given the recent price action, we can enter at $0.872, which is near the bottom Bollinger Band and below the RSI 40 level. The stop loss remains at $0.841. The target price will be $0.965, capitalizing on the forecast and the upper Bollinger Band. This combined strategy leverages both Bollinger Band volatility and RSI momentum, providing a robust approach to potentially high returns while managing risk effectively. Based on the historical data and forecast, just shows a slightly upward trend with price fluctuations. The RSI values generally fluctuate between 47 and 71, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening recently, suggesting increased volatility. Considering these factors, I propose a combined strategy incorporating RSI, Bollinger Bands, and support/resistance levels for optimal returns. First, we will implement an RSI-based strategy. When the RSI drops below 20, it signals an oversold condition, and will initiate a long position. However, the RSI hasn't reached this level recently. Instead, we will use a slightly modified strategy. When the RSI falls below 40, we will enter a long position at $0.041. The stop loss will be set at the support price of $0.0404. The initial target price will be the resistance price of $0.0447. Next, we will implement a Bollinger Band strategy. When the price touches the lower band, we enter a long position at $0.0375. The stop loss will be set at $0.0369. The target price will be the upper band $0.0416. Finally, we will implement a support/resistance strategy. When the price approaches the support price of $0.0404, we enter a long position at $0.0404. The stop loss will be set at $0.0401. The target price will be the resistance price of $0.0447. Combining these three strategies, we will prioritize the RSI strategy. The final portfolio will be long just at $0.041 with a stop loss at $0.0404 and a target price of $0.0447. Based on the historical data and forecast, Chiliz demonstrates a clear upward trend. The price has been consistently moving higher, supported by a rising RSI, which is currently above 70, indicating strong momentum. The forecast for the next week projects continued gains, with prices expected to reach $0.0637. Considering the current RSI of 79.4, which is approaching the overbought level of 80, and the Bollinger Band showing the price near the upper band, a cautious yet aggressive strategy is warranted. I recommend a long position with an entry price of $0.0558, placing a stop-loss order at $0.0542, just above the support level, to protect against a potential pullback. The initial target price should be $0.0626, aligning with the forecast for January 22, 2026. To refine this strategy, I suggest a tiered approach. If the price reaches the initial target of $0.0626, consider moving the stop-loss to the entry price of $0.0558 to secure profits and reduce risk. Subsequently, set a second target price at $0.0637, coinciding with the final forecast price. This tiered strategy allows us to capitalize on the predicted upward momentum while incorporating risk management techniques. The RSI and Bollinger Bands confirm that the price is likely to continue rising, and the support and resistance levels provide clear boundaries for defining entry, stop-loss, and target prices. This portfolio is expected to generate high returns with the current trend. Based on the historical data and forecast, DECRED exhibits a strong upward trend, particularly evident from January 13, 2026, onwards. The RSI consistently moves above 50, indicating bullish momentum, and the forecast prices predict further increases. Considering the RSI levels, we will implement a strategy focusing on pullbacks. We will enter a long position when the RSI dips below 40, which occurred on January 11, 2026, at a price of $16. The stop-loss will be set just below the bottom of the Bollinger Bands on January 11, 2026, at $14.3, providing a buffer against short-term volatility. The initial target price will be the resistance level of $22.9, representing a significant profit. To maximize returns, we will adjust our strategy based on the forecast and Bollinger Bands. As the price approaches $22.9, we will reevaluate the situation. If the price continues to rise and the RSI remains above 60, we will move the stop-loss to break even at $16 and set a new target price at $27.1, aligning with the forecast for January 22, 2026. This dynamic approach allows us to capitalize on the ongoing bullish trend while mitigating risk. The portfolio will consist of 70% long position, 20% waiting for a pullback, and 10% for hedging.